Well, we're through the month of September, the first month of spring, and national house prices have increased once again, even though apartment unit prices are a bit lower over the month, according to Dr. Andrew Wilson's My Housing Market. In our Property Insider chat today, Dr. Andrew Wilson discusses what's happening to housing prices state by state, what's happened to unit prices, and what we can expect moving forward for the balance of the year. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. There's been lots of property and economic news over the month of September. The Reserve Bank met and left interest rates on hold despite inflation falling, and the Australian Bureau of Statistics reported that household wealth rose for the seventh consecutive quarter, up 1.5% over $250 billion in the June quarter, particularly buoyed by rising house prices. But the news I'm keen to hear is the latest My Housing Market statistics for the month of September from Australia's leading economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yes, good day, Michael. It has been an interesting month, September, hasn't it? Particularly, as you mentioned, with the Reserve Bank's meeting, but really particularly about the latest monthly inflation data, which saw a steep fall in particularly the headline rate. And that was due to the government largesse providing households with a handout for their electricity bills. So that's pushed the inflation rate down in regard to energy costs, electricity costs. And of course, as we've been discussing, there was also a big fall in petrol prices and oil prices, which on the annual basis was quite sharp, and that's acted to push the inflation rate down, getting towards that range that the Reserve Bank looks towards, still above there, and no real indication that we've got a cut in interest rates coming. But the Reserve Bank, I feel, a little bit more relaxed about it, although that's a one-off, the handout for the electricity bills, and of course we don't know what's going to happen with the oil price, particularly given an escalation in violence in the Middle East. But house prices continue to carry on over September. The national house price up 0.3%, with a new national capital city weighted average of 1,149,547. As I said, up 0.3% over the September quarter. Now that's compared to the August quarter. So it's a monthly rolling quarterly model. And if we look over the past year, the national house price, the national weighted average capital city house price up by 7.6% over the year to September, and up by 13.2% over the past 2 years. And of course, that increase over September is the 19th of the past 20 months monthly increase. So 19 of the past 20 months we've had an increase, which is a pretty reasonable result, I would have thought, following those increases in interest rates back in 2022.
Well, it shows the resilience of the market, Andrew, but clearly the markets have been very fragmented,
yes,
almost into three tiers over the last year or
yes,
so, Andrew.
Absolutely, Mike. And we've seen that continuing. Once again, we've seen Perth as the headline mover, up by 1.2% over the month, the house price, the median house price, and really no sign of showing down. That's another strong result, Michael. Adelaide up 1.1%, just below Perth. So again, another strong result. And Brisbane up by 0.5%. Volatile Darwin increased by 0.4%. And some better news for Melbourne, with house prices rising by 0.3% over the September quarter versus the previous August quarter. So some good news there, but some typical news there in those big three, I guess we could call it, but some better news there over the month for the Melbourne market. Prices, however, were lower in Canberra, down by 1%, 0.1%. Sydney was down by 0.3%, and Hobart fell by 0.5% over the month. So not big falls, but nonetheless falls. And we are just starting to see a little bit of weakness now in that Sydney market in terms of prices growth. But I do think that's an affordability issue, given strong prices growth over the last 2 years in Sydney. Well, certainly solid prices growth, and that's starting to push buyers out of the market because of higher prices in Sydney. But other factors still remain quite positive, particularly the auction market in Sydney. And of course, the
Andrew,
annual.
I know that my housing market results have been very robust and been proven month after month as you report these, just a day or two before everyone else. But I know some people are going to think, hey, no, I've been reading in the media that Perth house prices, Adelaide house prices, Brisbane house prices are higher than Melbourne's. And what other people are often reporting, Andrew, are dwelling prices where they combine the houses and apartments. And in my mind, that's not a very good way of looking at houses, house prices, or what the value of my home would be, because Melbourne is skewed by having more
Yes.
apartments than other states. So you've really got to look at, in my mind, house prices, which you were doing, and apartment or unit prices differently. So clearly, when you look at that, Melbourne, the price of a median Melbourne home is more than those other states.
Yeah, and the other difference in the methodology, Michael, is that we don't use a raw median. If you just use the raw median, then Brisbane and Adelaide are actually ahead of Melbourne at the moment with the raw median house price. But of course, that needs to be adjusted from period to period for seasonality. And that's because the Melbourne and Sydney markets particularly have very strong prestige markets, which tend to activate in autumn and spring. So you do see a shifting around in the raw medians because of that strong seasonal effect through prestige markets. But the other smaller markets, Brisbane, Adelaide, Perth particularly, don't have the same strength of a prestige market that Sydney and Melbourne, and therefore aren't as exposed to seasonal factors. I hope that sort of explains it. But on an adjusted basis where you do account for seasonality, and it uses the ABS modelling, which has been used for decades to do that. So you can get a reliable measure of house prices and unit prices on a month-to-month basis without the volatility of having to explain that prices can change due to seasonal effects, not just the basic change in supply and demand, which is what we're a lot more interested in. But, on current trends, even with the adjusted numbers, that Brisbane particularly is looking to overtake Melbourne shortly. But this is the time of the year for the Melbourne and Sydney markets. That is the spring selling season, and we expect to see a higher proportion of higher priced properties, those prestige markets, active, and that of course will put upward pressure on prices in Melbourne and Sydney. But again, we adjust that for those factors, those prestige market factors that come in the stronger selling seasons. But nonetheless, regardless, the Brisbane, Adelaide and Perth markets continue to roar along. Affordability is the key to those markets. That's why they continue to grow, because their wages aren't that much different from the Sydney and Melbourne wages. So therefore they can continue to pay more in those strict conditions that banks put on purchases, because their prices are still lower than Melbourne and particularly Sydney. So, and certainly momentum is important as well in those markets. So we must remember that Perth's been an underperformer for the best part of a decade, Michael, and it's really refound its mojo, if I could say that. And we can see that clearly when we look at the house prices over the past 2 years in Perth. They've actually increased by 40%, Michael, over the past 2 years, Perth median house price, which is really quite spectacular growth. And you'd be pretty happy if you're a Perth homeowner to see that sort of a growth. But it did come following a very quiet period of activity the decade before.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, there's no doubt that many Australians are feeling a bit of a pinch at the moment with the rising cost of living, rising mortgage rates, rising rent. But it doesn't surprise me when I saw the latest Australian Bureau of Statistics showing that our wealth in general is higher because a lot of it's tied up in our homes, in our superannuation, and also in investment properties. Real estate is a great wealth builder.
Absolutely, Michael. And of course, some better news, as we discussed before, for cost of living with lower electricity costs and lower petrol costs. Let's just hope that continues onwards. And as I said, I don't think we're going to get lower interest rates anytime soon. And the Reserve Bank was quite clear about that, well, at least saying it's still concerned about the inflation rate. And it is relying on those quarterly data sets rather than the monthly data sets.
Yeah.
But we just need to keep our fingers crossed of what's happening in the Middle East at the moment.
Sure. What about the apartment, the unit market around Australia, Andrew?
Well, that was a bit softer over the month, the September quarter versus the April versus the August quarter. Michael, the national unit price was actually lower. It was down by 0.2%, and that was really contributed to by, as we've already discussed, the Sydney and Melbourne unit markets, which particularly Sydney makes up the bulk of that national weighted average unit price. Sydney was down by 0.5%, Melbourne down just a touch by 0.1%, but it really was the falling away of Sydney, 0.5%, that contributed to the fall in the national unit price. In fact, Michael, most of the capital cities reported lower unit prices over the month compared to the previous month. This is the quarterly data set, with Brisbane and Perth, our old favourites there. Not surprisingly, the positive results, both up by 1.1% over the month, and everywhere else was lower. With the smaller markets, Hobart and Darwin down quite sharply, 3.9% for Hobart and 4.2% for Darwin. But when we look at again, the annual results, Brisbane up by 24.5% over the year, Adelaide up 21.1%, 26.9% increase in Perth. And of course, it's quite a remarkable result for Brisbane, because that does have a very significant unit market, particularly the inner city Brisbane unit market. And there was a lot of discussion a couple of years ago that that market was saturated with new units and would remain oversupplied for some time, but that certainly hasn't happened. There's a chronic shortage of apartments, and plenty of buyers and tenants looking for apartments in that Brisbane market. Hence the increase of nearly 25% over the past year in the median unit prices, but certainly certainly less robust, the unit market over September, Michael, with prices falling everywhere except for Brisbane and Perth, although Melbourne down just a touch, 0.1%, and Canberra down 0.4%. But interesting that both Sydney houses and Sydney units were lower over the month.
Well, that's going to have some of the property pessimists coming out and saying, I told you so. But we're talking about monthly figures. When you look at what's happened annually, and definitely over the 2 years, as your charts here show, boy, the housing markets have performed very well. We've only got a couple of months left in the year now. How do you see it playing out, Andrew?
Well, it's more of the same, Michael. I think the point is there's affordability issues that are tracking markets. Clearly, the larger markets, affordability is still a positive driving force in Brisbane, Perth and Adelaide, whereas affordability is certainly starting to slow the Sydney market down. Now, even though prices growth has waned, I think it's more a factor in high prices starting to force out buyers in the market. And we know we have strong boundaries around our lending capacity in this country, which is a good thing because we can't overborrow. And I think that given the strength of the Sydney market over the past 2 years, that's finally, and of course it is Australia's highest price market, it's finally starting to crowd out buyers. But other factors in that Sydney market are still very positive. Clearance rates are continuing to track over 70%. The number of listings is significantly higher than where it was a year ago. And the number of auction sales is also higher, Michael, than where it was a year ago. And that's been tracking for a while. So it is more about affordability rather than some underlying issues of supply and demand. Sydney's still the home of more net migrants than any of international migrants than any of the other states. New South Wales, and of course, that feeds into the Sydney market. And also the Sydney economy, it still has an unemployment rate just a touch over 4%. So that economy is still strong. Migration is still fueling the market. And of course, it has still very low vacancy rates and the highest rents in the country. So as I said, it's not a supply and demand issue. It's just the normal process of the peaking of the cycle, and still plenty of activity in that Sydney market, just not the capacity to put prices up anymore because people have reached their peaks.
Well, talking about activity in our recent Property Insider, weekly Property Insider chat, we talked about the latest finance figures and showed that people are still planning to get into the market, including first home buyers, despite all the news about how difficult it is, Andrew.
Yeah, well, there's plenty of incentive for first home buyers, Michael. Very tough rental markets. So, you wouldn't want to be stuck in the rental market, or certainly looking for a rental property, because there's plenty of competition still. Although things are looking slightly better, but whether that's a short-term adjustment due to the midwinter markets or not is another thing. And I think also, tenants or prospective tenants are starting to make choices away from the rental market or the capital city rental markets because of how tough it is to get into those rental markets. But also high inflation and higher house prices is plenty of incentive for first home buyers to become first home buyers sooner rather than later. And of course, the other part of the increased demand, as we've seen through the lending data, are investors. And investors are very, very strong at the moment and have been for most of this year, and no sign of slowing down. And they've got plenty of incentive too, with higher yields, tight vacancy rates and higher prices.
Well, some of the news over the last couple of days has been the concept of changing negative gearing, tinkering with capital gains tax. I'm sure we're going to hear a lot more about that as the election cycle moves forward. So some interesting chats we're going to have in our weekly Property Insider chats. Andrew, thank you very much. So in conclusion, it's been another positive month, but a mixed bag of results.
That's right, Michael. And just a final warning note to governments: beware of fiddling with the taxation system for property. Just look what happened to poor old Bill Shorten not that long ago.
It's a very brave politician who'd even consider that, but maybe Anthony Albanese feels he's being backed into a corner by the Greens.
Well, he's okay. We won't comment.
Well, maybe best not to go there. Let's finish off on a positive note. Our housing markets are going to continue to perform strongly. Look forward to catching up with you again next week, Andrew.
Thank you, Michael. Thank you.